Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Friday, September 28th. Another week in the books in the market. Closed pretty flat. Wasn't boring. We saw some interesting things, but overall closed pretty flat on the week. Before we jump into everything, just really quickly, we do have a handful of S&P 500 companies reporting earnings next week. You got a Costco, you got a Pepsi, or PepsiCo, I should say, Constellation Brands, Paychex, and Lennar Corporation. So some reasonably sized companies. I don't know if these guys were late or early. The earnings season will be picking up in October, and we're only a few days away now. So I don't know if we call these guys late earnings or early earnings, but we'll call them earnings. So we'll want to keep an eye on that as we go into next week, but still a pretty light week. But we'll really start picking up here as we move into the second week or so of October as earnings season really kicks off and gets going. As we kind of move into our overall indexes, like I said, really kind of a flat day, much like it was kind of yesterday. We did see a little bit of back and forth, closing positive on the S&P 500, wasn't ready to run, but was kind of done, at least for right now, selling. So I think we're, overall, I think we're still looking at the pullback situation. That's how I view things, at least in the broad market, but just wasn't ready. And I'm glad, I told you guys before, some of you guys know me better than others, but I don't like when you're supposed to get in on Friday. There's nothing wrong with getting in on Friday. I just would prefer to get in on Monday. So I'm always kind of happy when triggers don't get hit on Friday and I can start fresh on Monday. And that probably is just a personality flaw of mine. I don't know, but I was okay with it. The NASDAQ was able to hold the break from yesterday and inch a little bit closer towards those highs before kind of selling off, closing, kind of pretty much in the middle of the range. But we still remain very bullish technically overall in that chart, not too far away from challenging the all-time high on the NASDAQ. So, nice thing to see about today is things held the way they were supposed to in the indexes. So even though it was a flat day, from a broad perspective, really our charts held very, very similar to where they were yesterday. Over on the Dow, certainly it's looking a little tastier to me. Nice little pullback. Hasn't got triggered yet, hasn't started that upward move, but we're starting to see now 3 days in a row of kind of holding that same intraday low. We're starting to see some buyers creep back in. We've all looked at some of the industrial setups that are out there. There's a lot of interesting setups in the Dow Jones, and so I really like the way that this chart looks. Will definitely be something I will be watching early next week from a pullback point of view. And then over on the Russell, we did rally, but we're not able to break through that 17, which we know that's going to be tough. That really is the line in the sand. Push back through that. Maybe we can talk, Russell. Until then, it's really hard to be bullish on this chart, at least in my estimation. But we did see some buying come in off of the lows from yesterday, which I guess is a short-term positive thing. But again, for me at least, Russell, as long as you're under 17, until new things develop, we pulled back further, then maybe we can talk. But until that happens, below 17, you're a bear or you're a stay away. At least for me, you are. So not really anything too earth-shattering overall in our overall market today. Closing, like I said, really pretty flat day. Now we did see our materials and financials really continue to struggle as the material sector fell through support, of course, yesterday and worked even closer to that next level of support of that 5750 range here today. It just keeps on selling. A lot of bearish sentiment over in the material sector right now. Very extended, much like it was yesterday and even the day before. We're very extended to the downside. I would expect at some point, at least, that some bargain shoppers will come in, some shorts will start covering, but that wasn't going to be this week. Keep an eye on that 5750. Don't be surprised if we get a little bit of a bearish retracement. For me, when I see this weakness, I don't care if it goes up. I wish everybody the best who trades it bullish. I'm not going to be one of them. I will be looking for a bearish retracement opportunity. Of course, I need some buyers to come in before I get that. So whoever you are out there, go bulls on the XLP sector. So energy, kind of an interesting day in energy. Started off really strong, running up, kind of closed down, as you can kind of see here near the bottom of the day's candle, really to kind of close, after original break, kind of flat over the last several days, but our breakout still holds. Everything technically still is lined up from a bullish perspective, in my opinion, at least, holding the breakout point, breaking resistance above the moving averages. So I think we're in a pretty good technical spot from a bullish point of view in the energy sector. Just wasn't ready to just scream up the charts like sometimes the energy sector does. So we have to kind of remember when it broke out, I mean, it was already pretty extended. It had come all the way from support to resistance and really only had one day down, really, of any note. And even that wasn't much of a note along the way. So it was very extended as it broke through that resistance. So not terribly surprised to see it just wasn't going to be one of those breaks that run. But of course, energy, we all know it can do that type of stuff, even if it doesn't make sense intellectually. So looking over at the financials, another very poor day over there. We did kind of close around that previous swing low. We've already broken our last swing low. So we're trying to find silver linings if you're a bull. That is a level of support that has, of course, mattered in the past. I wouldn't buy off of that support, much like materials. These guys are way too weak. I'm not buying while things are falling through support, failing at resistance. Again, it's kind of weird because you are seeing some interesting bullish patterns on some of this financial sector stocks, but you're also seeing some really weak patterns. I do think you're careful if you're trading into the financial sector next week because of the overall weakness, but there are some interesting setups. American Express was one, Aflac was another. So I mean, there are a few things that are kind of interesting to me in that sector, but I'll be careful. And I think that's kind of the philosophy. We can kind of pick within that sector, but we are going against overall some pretty negative stuff. So if someone said I'm not touching financials at all, and I don't know if I will or not, we'll have to see what next week looks like. If you said, nah, I'm not touching it, I'd say, yeah, that's probably a good idea. So at least we start to develop something new. But again, much like materials, we're very extended to the downside. When we look at real estate, when we look at utilities here in a minute, we'll see that eventually even the nastiest things have a little bit of a relief rally, right? And so at some point, buyers are going to step back into the financial sector, even if it's just short term, presenting a bearish retracement opportunity. We're getting pretty extended. We're at a support level that can happen anytime, right? So we definitely want to keep an eye on that. Our industrial sector still looks very nice. It, to me, at least, really was never able to get going because of kind of the general behavior of the overall market the last few days. But really just kind of hanging around on a new little level of support that's kind of been building these last several trading days to get to see that upward movement to kind of get the ball rolling. But I will be certainly watching for that to happen as we move into the early first half of next week. So really liking the way that sector looks. Our technology, we actually took out the highs. We actually broke through resistance. Of course, this goes with the NASDAQ. NASDAQ broke its resistance a couple of days ago. That's okay, just a day behind it, basically. But we're still looking in pretty good shape over in technology right now. Nice to see us push through that. We've been really struggled getting through that resistance. Over on the material sector, we kind of continue to dance right below that 50-day moving average. We have a support level not too far away from where we're at. I think we want to make sure that this holds. I think it's very important for the staples to hold that support level, or it ends up being a similar situation to our real estate, to our utilities, to those things that we saw break down last week and really struggle all the way into the end of this week. Obviously, it hasn't broke yet, and it's hard to break support, just like it's hard to break resistance. But I do think that's a really clear line in the sand. 53.50, below that, I will be bearish on the staples if that happens. If I'm looking at it from a bullish point of view, I could see a case there as well. I would want to see it push up above the 50 as a potential, okay, now it's okay to move in to this chart. So that would be important to me right now. Obviously, we're kind of between support and that 50, which I think is at least a short-term resistance level that I'd watch out for. So I think right now, really, it's a pass, to me at least. I could see an argument if it does push back above the 50 from a bullish perspective. I can definitely see a break of 53.50 from a bearish perspective. Now we get into our utilities. After the huge slump, they had a nice bounce back yesterday. Kind of continued that momentum into today. I'm not terribly surprised. I mean, it's a pretty big candle, so I am a little surprised at how much. But nothing really surprises us when we see all these things move pretty crazily, right? But of course, I'll always expect it to be smaller than that. But really, this is pretty much the same spot we were yesterday. Either you were willing to bet on that bounce of the 200-day moving average, bet on that support, bet on yesterday's candle to create upward movement as a legitimate buying opportunity, or you were like me and looking at that as that's going to be a place where people are likely to cover their shorts. And then, of course, that's going to turn into some intraday uptrends and some bulls are going to come in. And then we're going to create a bearish retracement, run into trouble at some point next week, and start some downward movement. Now, that's what I'm looking for. Whether or not I should or should not have, I did not feel comfortable getting in off of this little 200-day moving average bounce personally. Good luck to all of those out there who did, but I'll be looking for a bearish retracement. Obviously, that's not today. We're still definitely in the upward swing over in the utility sector. My best friends in the world, the healthcare sector, continue to be trusty and reliable. Never the most exciting one to look at, but always doing their job. What else can you say that we haven't said for 2 straight months? How long we've been doing the market recap, whatever it is, we've been saying this pretty much the whole time. Just good times over in the healthcare sector. Remains very strong, remains very consistent, remains a very nice place for the bullish traders out there. We are testing resistance yet again on the material sector. We ran up, we're pretty close to potentially trying to break today, but really gave up as it got to that resistance, sold off a little bit to close below it. I still think we're looking at this overall from a neutral perspective until we break one way or another. With that said, whenever we're this close to a range, to the top or the bottom of a range, we can start preparing for potential breakouts. If we do break out, what would I be interested in trading? ETF or stocks within that sector? We can do a little game plan this weekend for potential breaks to the upside. Not that we should necessarily expect them to happen, but it could happen at the top of the range. It could theoretically happen as early as Monday, since we're that close, right? Whereas on the breakdown side, I guess anything's possible, but theoretically, it's very unlikely to happen on Monday, right? But hey, a week from now, we might be closer to support. We can start thinking about it just the other way. Let's look for some bearish breakdown opportunities. But really, we're kind of in the same spot today that we were yesterday. I think this is a neutral until it breaks one way or another. Real estate kind of got in on the bounce back situation today, coming in off of that support. We saw some buyers step in yesterday, very extended to the downside. Overall, pretty bearish chart, failing at resistance, failing at support. Eventually people are closing shorts, right? And then again, it really took off today. There's no doubt about it. For me, again, much like utilities, that is not the type of chart that I think is a great buy. It might be fun. And it might be your cup of tea, and you might be better at it than me. So if that's part of your trading plan and your trading rules, and you've got it figured out, then certainly have my blessing and hats off to you. For me, I look at this, I say, yuck, it's weak, retrace, give me some sell signals, and maybe I have some bearish retracement opportunities as we move into the second half of next week. So for me, there's really nothing to see over on the real estate. But for what it's worth, again, my opinion is always my own. We have established support. We have established some upward movement. That candle obviously is very bullish. So the bulls are in charge right now on the shortest of terms. That's just not enough to interest me. And lastly, over in our communication services sector, kind of sold off a little bit here today. Overall, we kind of are trending upwards a little bit in the short term, kind of a little bit of a mess in my opinion, but I do think we can kind of use this trend line that's developed off of these lows as kind of our guide as we move forward. Get flat day in the market, Facebook, kind of struggled. There's some stocks in the sector that kind of did struggle, but it's an interesting spot. I really do believe that it's an interesting spot. I'm going to be watching this trend line, or again, a break back above that 50, which we were able to close here today. If we were to see some upward movement, that would be a little bit of a signal, in my opinion, where we broke out and up yesterday, close above the 50, dipped down, and then made a little hammer candle, kind of closing right on top of the 50 today. I think I could see the argument if we moved up on Monday that was a little bit of a buy signal. I don't know if we'll get it. I don't know if I'll take it, but I think you could make the case there. So that's where we find ourselves in the sectors here at the close of the week. A lot of stuff kind of doing what it's supposed to do. A lot of stuff just really having a hard time. Materials and financials just, they looked like interesting pullback candidates at the beginning of the week, and now they look like stay away until they simmer down candidates, at least if you're a bull, at least to me. But nice to see tech work its way back up. Obviously, always great to see our our friends over in the healthcare sector doing what we've become so accustomed to them doing, and that's just their darn job. Pretty fun stuff. Over in gold, we kind of rallied off of that low yesterday. I think we're still very flat. I think we're still very sideways. I don't think you can have a change of opinion, even though we've seen a little bit more activity over the last couple of trading days as far as size of the candles and movement. I do think we're still in this range, and I think we are stuck here until we're not. I think you can still look at it on either side, whichever side or both sides of a potential break, but I don't think we've had that just yet. Silver, on the other hand, went ahead and made me eat my words a little bit. I didn't trust that break, and I was feeling, I think I said it yesterday, feeling pretty good about that decision yesterday. Not so much today. I'm really okay with it. You can't trade anything, and you don't want to trade things that you're not comfortable with. But it, regardless, had a really great day. Ran all the way up into that 50-day moving average, which did act as a little bit of short-term resistance, pushing it back down. These are bullish things. I still can't get behind it. Maybe that's just a me thing. But now we've created higher lows, higher highs. Obviously, we want to watch that 50. We know that we have this previous swing high that's kind of lining up pretty close to that 50-day moving average. There's upside. I can't deny it. There is upside in silver if this is indeed a bottoming out pattern. I still probably am not willing to take it. But I can now start to see the argument for those out there who are. I couldn't have seen that a week ago. Today I can definitely see it. But if we're watching it, let's keep an eye on that 50 as a potential place to push us back down. If we're looking at this from a selling point of view, if we're looking to take profits, if we're looking to get in, let's see if we can break through that 50. That 50 can and oftentimes does act as something for these for all stocks and in commodities, but definitely can with the metals for sure. So pretty interesting day over there. And like I said yesterday, I was glad I wasn't trusting silver. Today, I wish I should have trusted you, silver. But you can't trust everything all the time, right? So most importantly, I wasn't going against it, right? And that's what's really important. Another back and forth day over in natural gas. Unfortunately, and this is not what I wanted to see, but it is what I got, and I don't get to choose. I was hoping we were going to be able to close above resistance on that weekly chart. We were not able to do so. We tried, we failed, closing down towards the bottom. I do not like that candle at all. Again, this is weekly, so I'm thinking a little bit bigger. It's really going to have to break through that resistance for me to get on board from a bullish point of view at this point. With it closing below that, we've seen these type of candles on our daily charts, but it applies to our weekly charts too, where they break out on the intraday or now intra-week and close back below with that long tail up top. That can be a bearish candle. So I'm not saying it is going to be bearish. Obviously, we see some downward movement, I would say that. But from a bullish point of view, I think it has to get back above those highs to really trust it. That's what I'm going to need. But certainly was it put up a fight, and the fight's not over. Just because it didn't, get a knockout week one doesn't mean the fight's over. I just don't. It looks like it's a little on the ropes to me. Over in the dollar, another strong day. The weekly chart will show that we're working back to the top of those ranges, right? Just like that. A couple of days ago, we were below the support. Today, we're challenging resistance. Still, again, I think there are better things out there. I'm not sure. Is this a potential head and shoulders? We do have our left shoulder blade, our head, and potentially our right shoulder blade developing. Obviously, it hasn't happened yet. We know how important that approximately 95.50 has been. So we do want to watch that, whether you're bullish and want to get out of the trade, or buy it if it breaks it, or just want to go bearish and sell it back there. Wherever you find yourself, I think we can all agree that the 95.50 has been very important on the dollar index as of late. So we do want to keep an eye on that 95.50 area. But boy, it closed the week strong. It did. It really closed the week strong. And of course, lastly, our old friends at Crude had a really solid little day. They took out that 72.50. I think we looked at that yesterday on our intraday chart. We had that kind of intraday resistance form, pushed through that today, and looks like we weren't the only people thinking that, right? That candle, that hour that 72.50 broke really took off. So it doesn't look like we were on an island in that capacity. We did work up, got fairly close to 74. I don't think we touched it, but yeah, I don't think we got quite there, but we got pretty darn close. So 74, that's kind of that resistance area that we're going to want to be watching. Overall, though, I mean, you have to be very happy if you're bullish on crude. Really performed strong this week. A lot of things made sense. You know, it was able to hold that break as it pulled back late last week, show that upward movement, kind of consolidated, even sold off a little bit. Buyer stepped right back in, broke out. So a lot of good things happened. Of course, now we've got to deal with resistance sitting right on top of us. So we will want to keep a close eye in that 74 area as a potential resistance area. But for the time being, I mean, you have to be very satisfied if you're a bull on crude. It definitely closed the week very strong. And I'm happy to see it. But I know some people who were on the bullish side. I don't know anyone who was on the bearish side. Go figure. That's why we do technical analysis, right? One thing not to trust it, it's another thing to be completely on the wrong side of things. And so that, ladies and gentlemen, is where we find ourselves as we wrap up this week for the market recap. For the market, certainly was not a boring week. Maybe not as pretty as last week was, but they can't all be, unfortunately. Should be some interesting opportunities out there, both from a bearish and a bullish perspective as we work into next week. Obviously, this weekend, in addition to having a great time with your friends and family, make sure you are making some time to go through your watch list, to go through the scouting reports, to go through any scans that you want to run so you're ready to rock and roll on Monday morning. But again, always make sure you're taking some you time to spend with your friends and family over the weekend too. So with that, ladies and gentlemen, as always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the YouTube channel and hit that notification bell if you haven't already, so you can always be alerted to any new videos that we're doing over here at Tackle Trading. And be sure to follow us over at Tackle Trading on Twitter to kind of keep an eye on some of the things that we're doing and following throughout the course of the day. If you did enjoy the market recap, it is always very helpful and appreciated if you give it a thumbs up, just to let us know we are on the right track. With that, get out of here. Have a wonderful weekend, and I will see you in the next one.